everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, November 13th. Had a little bit of movement to the downside. Other than that, relatively quiet. Markets actually sold off midday briefly, and then we just kind of popped up into the close. But really lackluster movement. Markets are digesting the bigger move that just happened for the last 20 days or so, hanging at the upper end of the range. Let me just run through the numbers real quick. Dow Jones down 32, Nasdaq up 13 cents actually, and the S&P down 4, Russell down 3 cents. So we're getting no movement now. But that, to me, is going to change. Markets are not just going to stay in this range much longer. When you have a larger move like that, digesting their move in the upper end of the range is actually quite bullish. That does not mean the markets can't roll over. So we need to sit on our hands. We need to keep the guns loaded, and we need to be ready for the move, because I do think a risk rally, either on or off, is going to happen in the coming days, if not today. I've been looking at indicators and charts, and I'm not going to bore you with details. I just want to show you a couple of indicators. We'll go right into it. It's going to be a quick video. Nothing has changed. Our indicators are even more so now, telling us that we're looking for some sort of a pullback in the coming sessions. Quick look at the VIX. As you can see here, our VIX is at the lows again, 1240. 12.30, 12.50, $12. Another push, can it go lower? Absolutely. I'd like to see this actually, even markets even rally for another day or two, push up into highs, and that could put some sort of a capitulatory top in place while the VIX actually dips down into these lows and then reverses. That is an ideal situation. Is that going to happen? Unfortunately, nobody knows. But I do want you to keep an eye on the VIX today. Moving forward. Now, the dollar actually paused. The dollar did have a big move, as you can see. The dollar actually paused here, sitting at this area just underneath the 200-day moving average, just underneath this area of resistance, which was support. We're going to need to really break 81.81 and then hold for a couple of sessions, maybe consolidate like this, and then start to rally higher. If that indeed does happen, I do think that the markets will start to sell off a little bit, and then you'll see the dollar really picking up steam, as well as the forex markets are concerned. So that's a great little watch. I'm going to also put on my list for indexes and sectors to look at. The dollar, definitely. Now I want to show you crude oil real quick. We had yesterday. Say if you like the oil, if you like crude oil's coming into some heavy support. Okay. For a trade, I mentioned if we could take this out here up top in crude, then I think for a trade, a counter trend trade, if you're familiar with those, you could take it for at least a move, maybe to the 200-day moving average. We did not get the trigger for an intraday trade, so the day trade was off the table. However, now we're coming into support. That does not mean that I want you to look to go buy it, but look for some of the look for some of the oil stocks, oil services that have just been kind of like hanging around, not really doing too much, but either came out with earnings already. Nothing's wrong with the company. Start looking at those, because when oil starts to rally, they're going to get that sympathy rally with oil. So I think oil is going to be a pretty decent play. I'm not looking to pick a bottom, so please remember that. But we're coming into some big support areas. As you can see here, we do have the volume profiles on the outside where a lot of supply and demand have been in this area. So this is what I'm looking for a bigger push to the upside. Now, we could just continue to move lower. So I'm not telling you to go pick a bottom. Let the market stabilize, let crude stabilize, chop around a little bit, and then take out the existing base. That's going to be your better entry. Okay, now, that's crude oil. Now, individual stocks are a different story. If you're looking at some oil services and oil stocks, oil drillers, then you'd have to base your analysis on its chart. Okay, let's go run through the indexes real quick. Again, nothing really has happened. You can see we've been literally we had one big down day on Thursday, one big up day on Friday, and now we are down 5 handles in the pre-market, as you can see here. This is a December Christmas contract continuous, so we are down 5. Okay, so got a little bit of movement to the downside, but excuse me, really not much to talk about. We need to start breaking down to some of these certain levels here. I'm looking at, and you might want to write this down, in the minis I am looking at 1752, I'm looking at 1747, and then I'm looking at the low here at 1736, that low here. If we start to break these areas, you could gently dip your feet short into the market with a tight stop. And as you break this low, and this is going to be an important low here, if we get this on a closing basis, then I think the markets are ready and set to move lower. And where it goes, we could easily start to look for pullback zones area once we do get that move lower. But until then, the markets are still quite bullish here, guys. I wouldn't be looking just to go out and just short the market at the moment, okay? Let's take a look at USO, and as you can see here, clear move in the USO. We just took this. Well, we took this previous low out, and now we're just sitting on. And let me just show you here. We are getting to a point. We're getting to that 76% retracement off the high, and we are just about there right now. A little bit more to go, but if you get a flush in there into the zone, look for some sort of a reversal pattern in the USO to try to maybe start nibbling in some gold, in some oil. Excuse me. Okay. Gold actually just took a big tumble, and again, I'm looking for any retracements now back into the zone area of 126, 127, 128, 129, anywhere from here to here. So 127 to 131 is where I'm going to be looking to enter a short trade in gold via options in a GLD. Okay, at the moment, again, risk is you're sitting on support. No sense looking to short. Look for a bounce or let it capitulate and look to buy gold much lower. Okay, and just despite, as you can see, nothing has happened. If I even open up the chart, you can just see that we have no movement since Friday. And Friday was just the big move up on no volume, and now we're just kind of meandering around here. Okay, and you'll see this on the rest of the charts. Same thing with the IWMs, guys. Really nothing going on here at the moment. But rest assured, markets are ready to make another move. Diamonds, same thing, sitting on the upper end of the range. Now, again, the pattern is quite bullish because we're sitting at the upper end of the range, holding these areas. We're going to need to start breaking down, making lower lows and lower highs for it to actually break that bullish pattern. Okay, transports really on fire yesterday. And that was obviously getting a big help from crude oil being down. Really, crude got decimated yesterday. And XLF, as you can see here, upper end of the range, it did a little bit of movement to the downside. You can see, but really the stocks didn't go anywhere. Just some of the indexes have been moving, but nothing as far as stocks have been really going anywhere. Other than, of course, if you're looking for an upgrade or a downgrade on the stock itself. J.P. Morgan again after that big move consolidated. Now, I'm watching J.P. Morgan for a breakout here. I'm looking for J.P. Morgan to break out. I'm not looking to get in here to get short, but if we can retrace back half of the candle, sit on the 50-day moving average, I'm looking to place a trade in Goldman right up in this area here. Stops either below here or below the lower trend line. And Goldman Sachs, again, I still like it, still holding a range, but it's been a quiet trader other than the last 2 days. And Apple. Now, Apple is interesting. Apple really hasn't gone anywhere, as you can see. We did have that explosive move up. We sold off on that product announcement, and then we just literally meandered and went sideways. Apple is going to make a big move. And again, unfortunately, we don't know where. Look at the Bollinger Bands. They're starting to pinch here. That means that energy is building. Let Apple break out or break down, and once it breaks out or breaks down, you're going to get at least momentum to that direction for at least several days, and that's where you want to look to play it. If it broke to the upside, you might want to either buy the stock, buy calls, or sell or put credit spread, and vice versa if to the downside. But let it break out first. Don't just guess. It's not worth it. Okay. And lastly is the IGN. Now, we're coming in here. It's still a bearish pattern, but it's starting to retrace a little bit. It's still holding the 20, and we are now above the slanted neckline. Okay, but now we're going to need to hold this area and start to break down. If that starts to break down, I'm going to be looking for this in this sector, the weakest stock to short. And again, same thing with the Qs. Lastly, again, just holding the 20-day moving average. So nothing wrong with the indexes, guys, just not moving. The last couple days, we just had some little bit of movement. Actually, the precious metals and commodities have actually been doing more movement than the equity markets. And also the Forex has actually been, a lot of the majors are just been in this consolidation range. But I do think the dollar has sparked a big movement in those majors, and I do think that the markets are ready for a big move to the upside and or downside. I think you're going to see more further downside risk before we move higher again. And again, nothing tradable, but I just want you to be aware. If the markets pop up and break out, to the upside. I'm looking for a 1780 or an 1800 move to the upside in the minis. And if that does happen, I'm looking to that area, and if it fails, that's going to be an ideal short. Or the markets pop up for a day or two and then fail. That could put that capitulatory top in place, and then we can indeed roll over. Other scenario is we could just start to sell off from here and a top is in place. We really don't know that until we start making lower lows and lower highs. So there's a lot of homework involved. We don't want to be looking just to go out and short the market, but if you are long and you got a portfolio of longs, definitely hedge. I think it's a wise bet to do. Have a great day. We'll speak to you tomorrow. Take care, everybody.